Hi, welcome to Volatility 411 for Tuesday, May 19th. I'm Russell Rhoads, head of research and consulting at EQ Derivatives. It's the day before the May contracts go off the board, so keep in mind that standard May VIX futures and options do expire on the open tomorrow. Right now, the S&P 500 is basically unchanged on the heels of a very big Monday. Remember when we had Big Monday with college basketball? VIX is around 28.75. The May contract's a little bit above it at 29. June's at 30 and August is at 30 and a quarter. Keep in mind October is that 1 point outlier. It remains at a premium to the other futures, kind of bumping up on the curve as we are anticipating extra volatility going into the November elections. VVIX is up at 125, higher than where it was when I was standing here last week. Long-term average is around 90. The longest streak of VVIX being above 100 before the current streak was 34 days in 2008. We have been above 100 for the 61 days if we close above 100 today, which is highly likely when it's 25 points above there at this point. Keep in mind when VVIX remains somewhat elevated, it can be, when VIX is moving lower, that can actually indicate that people are using the lower VIX to maybe step up and get some tail risk protection and buy some out-of-the-money VIX calls, thus pushing VVIX higher or holding it up at elevated levels. So finally, taking some look at some trades. Yesterday, about midday, somebody bought 10,000 of the October 25 puts for 227. An anticipation maybe that volatility will come in as the election is approaching. If there's a certainty with respect to the outcome, that's very possible. And then finally this morning, 10,000 times somebody sold the June 25 calls for 706, bought the June 30 calls for 456. That is a credit of 250. Maximum risk is 250 as well. And the break even on that trade's 27.5. So for Tuesday, May 19th, I'm Russell Rhoads, and that's your Volatility 411.